You did crazy, oh, you ain't on a payroll. Can't be hanging with the same bros. We don't even go to the same shows. So please be quiet, I'm being polite. You did crazy, oh, you ain't on a payroll. Can't be hanging with the same bros.
Hello guys and girls, and welcome back. It's Big John here. The at's at the bottom of the screen if you'd like to listen to my music. So is all the relevant information I'll be speaking about in this video. And what I'm going to be doing today is I'm going to be teaching you about the Wave 3.0. That's right, this is the third installment of the Wave strategy. Now, what I've done is I've updated how I use Pip Hunter, and I'm only trading pretty much so the London breakouts with this strategy. We're not going to be using it for New York or Asian, just the London breakouts. So I hope you're going to like this one, guys and girls. Let's get into the video. Okay, so as you can see on my chart at the moment, I have GBP USD. I'm on the 15-minute chart. I have the Pip Hunter baseline overlay. I have a 200 moving average here, simple moving average. I also have the Pip Hunter back D. This is set to a certain setting. I will go through all my settings at the end of the video, just so we get straight into it. And what I'm going to be showing you over a month-and-a-half period, how many safe trades I would take with this type of strategy. And you'll be shocked to see that there isn't a lot of safe trades. I think when I counted it was about 13, 14, but we'll do the count at the end of the video. So if you go into this trade right here, I would have been able to take this trade here because the London session has appeared. Price is underneath the 200 moving average. We had a back D cross here, so I would have been able to get in here. And I'm looking for about 20 to 30 pips. That's what I'm looking for. So I would have had a 20 to 30 pips stop loss just above here. If it was 20 pips, it'll be here. If it was 30 pips, it'll be up here. So it depends on what I want. And if I wanted to get, look, this was more than 30 pips, it's about 50 pip trade. So that's that trade there. So if we go to this trade here, I would have been able to take this trade. Now there wasn't a back D crossover here, but what does help me is price is above the 200 moving average, as you can see right here. It's also above the Pip Hunter baseline overlay, as we can see here. The baseline overlay, it's not crossing over bearish, bullish as well at the same time. It's still bullish. And at the same time, we can see we had a Pip Hunter blue star here, which represents a bullish buy, and the white stars represent a bearish sell. So I would have got in here because I didn't have a back D crossover, and I would have taken this trade up. Stop loss would have been below there. As you can see over here, I would have got in this trade. We had a back D crossover here, and I had price above the 200 moving average here, and I was above the baseline overlay. It didn't break through, cross through, so I would have got in right around here and took this trade up. Stop loss would have been below here. And as you can see here, price is below the 200 moving average. We're in a bearish trend. I've got a bearish back D crossover here. I would have got in here 20 to 30 pips. I would have had to hold my trade this time just a bit longer. So let's just say we do 30 pips, be a bit safer. And eventually price would have given me at least 50 pips, if not more. And if I held it for the rest of the day, we're looking at almost 85 pips here. Now here, I would not have taken this trade. Reason being, even though it did give me the pips I needed, I was very cautious because I did have a blue star here and a back D crossover, so that was my strongest confluences. But price did break through the 200 moving average, so I could have been led to believe that the trend was changing, and I don't want that to be the case. So I personally wouldn't have taken this trade. I would have said it was a no trade day for me on GU. I would have left it. But if you did decide to take it, maybe with a bit smaller risk, you did have the confluence of the bullish blue star here, and also the baseline did start to turn green here, and you was when price started to buy above the 200 moving average. Now right here, we can see that price was above the 200 moving average here. We're in the bullish baseline color, and we have a back D cross, so I would have taken that trade and I would have won that trade. We can see here as well, price is underneath the 200 moving average. We can see here I've got a back D cross, and I've also got a bearish star that did appear. I didn't have to wait for the star. Back D cross was enough for me, so I would have been able to get in here and I would have been able to make my pips, just to show you that this is the correct amount of pips. See, it's about 35 pips. Now, even if price is moving a bit funny and it's not giving you 30 pips, even if you have a 30 pip stop loss, if you see about 25 pips and you feel you must get out of this trade because it looks a bit funny, it's pulling back too much, you know, come out of the trade. Of course, you don't want to take it at 5 pips, but if you're 20 plus pips in and you did have a 30 pip stop loss, just take the trade sometimes, you know. It's not every time you must do that, but if you have to, just take it. Now here, I would have been a bit more sketchy, being that this is Friday, because I have this indicator on. That is the FXN week and day separator. Now you could have taken this trade and you could have come out at about 30 pips profit, because your entry candle would have been around here. And even up to here was about 22 pips, but let's say you took it up to about here, it was about almost 30 pips. You could have took it here. But me personally, I'd have been a bit sketchy of this day, one being it's Friday, and 2, at the same time, I can see the way the MAs are behaving here in the baseline overlay. So I possibly wouldn't have taken this trade, but I've just put it here just to show you an example. You did have price above the 200 moving average. You had even a back D crossover, and you had a Pip Hunter blue star here. So there was good confidence to say you could take the trade, but at the same time, I'd have been a bit sketchy of it. Here's a better example. You can see prices beautifully being held up by Pip Hunter baseline overlay. You can also see the back D crossover here, and you can see that you had a nice bullish trend here. Now here, this is a bit of an in-between trade. Why I say that is because we didn't have a star appear here, we didn't have a back D cross, but we did have our other confidences in check, which was price was above the 200 moving average on the London breakout, and plus it was above on the Pip Hunter baseline overlay. It was bullish. So I could have taken this trade. Of course, here, in trades like this, I would lower my risk. So I would now use less of a lot size. I wouldn't put the lot size I would usually use if I had all of my confluences here. So if you don't want to take these trades at all, just don't take them. That's why I marked it out yellow, as it's a possible entry, but you don't have to take it. It's either there, it could be on another GBP pair or not. So here, I possibly would not have taken this trade. Reason being, why I've put this here is 1, it's Friday as we can see here, and 2, the market was above and in between the 200 moving average. So I don't know if it's going to go up, or I don't know if it's going to go down. Even though it did go down, this wasn't clear enough for me. Maybe another GBP pair would have given me a better or clearer indication of this trade. So I would not have taken this trade. Even though it did present beautiful pips, I would not have taken it. You don't have to trade every day. Here, better example, you had a back D crossover. I had the pips that I needed to get just for that London breakout, just coming out of the Asian range, and I would have been fine to just take that here. Here, now I would have taken this trade here. As you can see, price is edging up and going towards breaking through the 200 moving average, as we can see. As price is going here, we can see we had a back D crossover here. It was edging and just breaking through, as you can see right here, and I would have just taken that trade going up here. Now, I would not have taken this trade. You're starting to see a repetitive pattern here from Fridays. You can see this was a Friday. Also, this was NFP as well. So therefore, I wouldn't have taken the trade anyway, but it did present a bullish buy from the crossover here. But the baseline was looking a bit sketchy. Price was above the 200, but did break through at one point. So there's a lot of confluences for me to say, you know what, it's not safe to take a London breakout here. Now, this was similar to the last vertical line trade I was explaining previously, that this one, because there was no star, there was no back D cross here, we could have been a bit skeptical about taking this trade. Of course, you lower your risk, and this would have been a good trade for you if you did lower your risk, because you would have had a stop loss about here, and you also would have been able to gain almost 200 pips off of this trade. So even if you lowered your risk, you could have made the profit that you wanted to reach anyway. So this is why I would lower my risk if I was to take a trade like this, but you do not have to. I know it's a very good trade. The market will always present good trades, but you don't have to take it if it's not good enough for you. Look how price is looking very sketchy around this area, even though it's under the 200 and it's around the baseline. Look how price is breaking through the baseline overlay. I would not have taken this trade. This was very, very sketchy for me, so I would have left it. Much more better trade. We even have a back D crossover here. We have a star here. We have price above the 200 moving average. We have the baseline nice and bullish as well. I would have taken this trade. Here, we have it again. We have a star crossover here. We did have the back D a bit earlier. It wasn't exactly in London, but we can see now that price is underneath the 200 moving average. You can also see the baseline has once again has gone underneath the 200 moving average, bearish, and I would have been able to take this trade upon this star showing up right here. You can actually leave alerts on these stars as well. They might not come up all the time in terms of these crossovers, but you can leave alerts on these. So yeah, we would have been able to just get this trade going in here. I would say make sure you're up about an hour to maybe 2 hours before London opens, so you can assess any charts that you need to and split your risk management between the pairs if you need to. That's the GBP pairs, I would say. Or you can just, you know, make sure you've got a good eye on checking a top-down analysis of this. If you'd like to know how I do my top-down analysis, then please feel free to contact me in my Discord group. I have mentorship in there where I teach people about weekly cycle and so many other things of how to do top-down analysis, etc. So please just hit me up if you want to get involved in that. We have another trade right here. As you can see, price was underneath the 200 moving average. Clearly, even though the baseline did turn bullish, we can see prices underneath the 200 moving average. We had a star here, we had a back D cross here. So this is telling us more than anything, this is just a pullback. When we had this crossover, you even had the baseline, which I have mine set as a white and yellow line. You can see that the baseline crossed over here, telling us that the baseline trend was going to go bearish when they crossed the other way. As you can see here, it's going bullish. So you can see that baseline trend was going bearish. And even if you didn't get in on this candle, you could have got in here. And of course, your stop loss would have been 20 to 30 pips up. and then you can see price came all the way down here for the rest of the day. And I actually caught this trade and I called this trade out in my group as well at the same time last week Friday. It's evidence of that. And as you can see right here, there was this one here. I called this trade out in my group as well for today. So you can see that even though price did come back down, this was hours later. You can see that right here, you had a back D cross, you had the market going up, your price was above the 200 moving average, baseline was above the 200 moving average, and then you had a back D cross like I said here, and you would have been able to get this trade. I put this trade in my group. This was a 100 pip buy. Look at that. Look at that. On average, you can see that this is a very good strategy for you to be able to use so people can get some of these pips and people can understand how to do this strategy. So if you would like to get Pip Hunter, please feel free to contact me in Discord. I'll be able to put you into the right departments, the right places to be able to get it. I do this so that people don't get lost around the groups trying to figure out how to purchase Pip Hunter. And if you would like to, please like, comment, share, and subscribe on this video. I will appreciate that a lot. And also at the same time, if you'd like to get into my mentorship, or if you'd like to get into the Starfish Prime Signal group, which is run by 3 members from 3 different groups, me being one of them. The link should be in the description below. But like I said, if you'd like to get into my mentorship and learn even more about Forex, you know, because even though I do all of this, I still know how to do top-down analysis and things like that. I'm not saying that this is the only way to trade, but it's a very good method of trading just off the bat, basically. At the same time, I still respect the market and I still put in my top-down analysis when need be. So if you'd like to get any of that, hit me up in Discord. So now we're going to do the last thing here. I'm going to show you how many safe trades there actually was in that month-and-a-half period, which I would have taken. There was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So that is 12 trades. Are you hearing me? So that was 12 trades, only 12 safe trades that I would have possibly taken from my 15-minute entry on this trading instrument. So once again, it's your boy Big John. If you like any information how to get all of this source and anything like that, hit me up in the Discord like I said. And on top of that, you know, we're doing amazing weekly pips that I'm managing to catch with my markups that I'm doing for the group. You know, I give out 5 free ones. You're going to see that at the beginning of this video. Yeah, and more than anything, long life, prosperity, and just keep enjoying, man. Keep enjoying. Let's get these pips. Peace.